Hey everybody, how you doing? It's Bruce here. Welcome to another day. It's Thursday, July 22nd, 2021. Welcome to
Hey
July
everybody, how you
22.
doing? It's Bruce here. Welcome.
Getting ready for another action-packed day, I think. Things are looking pretty good. No complaints here about how the market has been going. Yeah, welcome. We're up on the pre-market. Nothing incredible, but there are things happening elsewhere you need to know about, and this is going to affect or possibly affect the whole picture. And then we have individual stories going on. So there's lots going on in many directions. And as usual, I will attempt to explain to you in plain English what the heck is going on, so that we can stay on top of these crazy changes in markets. I was thinking about picking up some August 13 calls on SoFi. I know it's shorter term, but I figured since the earnings call is on the 12th, I'll probably make some money on them. What do you think? Well, it's a gamble. There's no question about it. There's an absolute gamble. But yes, there will be the announcement on the 12th. And, maybe between now and the 12th, there's a run. So if you're looking at picking up maybe, I don't know, 15, 16, 17s, I mean, if you can get them really cheap, take a look at it. But if you're buying call contracts that are less than 50 cents each, just to give you folks an idea, those of you who don't know, 50 cents on a call option, that means it's a $50 contract. You're getting the upside of 100 shares of SoFi for $50. This is why these trades so heavy. $500 gives you upside potential on 1,000 shares. Now, if you have say $17 contracts, I'm just pretending, I don't know what the price of a 17 is, but if you had a $17 contract and the stock went to 19, it's a $2 book value on the contract. Even if there's only 50 cents premium on it, it's a $2.50 contract. Well, if you can get them at 50 and they go to $2.50, you made 5 times your money. Now, you buy one contract, you turn $50 into $250. Hey, you can go for a nice meal, I suppose. But if you take 4 of them or 5 of them for $250 and turn them into $1,250, nice. 10 from $500 to $2,500. Now we're talking some money here. That's the kind of stuff that's going on out there right now. You got to decide your own tolerance, your own risk level, your own, everything is the way it is. So there you have it. Is 200 to 205 still a good strike price for GameStop covered calls for next Friday? Yeah, not a bad idea. If the shares of GameStop do a little pop this morning to 190, 195, you might want to look at 205s, maybe 210s. Just keep an eye on this market between now and, say, the next 2 or 3 hours and see what it's going to bring us, because it doesn't look like it wants to back off at all. A little while ago, you said it might be a good idea to write put options on SoFi. 35s for January, as an example, would writing put options be a valuable strategy? If you can get the right premium on them, it's a great way to go writing put contracts on SoFi, because you're guaranteeing to buy the stock at a set price. You'll be paid a premium upfront to do it. The key is to get a premium plus plus time value. That's the secret to making it work. And so, yeah, I do like that strategy. We did cover that this past weekend in our classes. Your classes this weekend touch on option spreads. No, that will be probably next week. We're going to talk about option spread strategies. We're going to talk about butterfly spreads and others. We're going to go into more complicated option strategies next weekend. This weekend is for noobs. This is the noobs weekend. If you're new to trading, you got to know what to do and what not to do. We're going to cover that this Saturday and Sunday. Some of you who are really into complicated options trading, you might be interested in next week's series of classes. Oh, we're going to have fun around here. I finally have 100 shares of GameStop. I'm looking to write my first call with today's dip. What price date should I consider? Well, I wouldn't write one at the moment. We are down 550 on the stock. Let's see if there's a recovery today, maybe into the 185, 190 neighborhood. If that happens, you might be looking at a 200 to 210 contract for next week. We'll see what that looks like. So just sort of stay tight, stay put. Don't get anxious. Just be cautious and be patient to pick your spot here. are calls 3 weeks or a month out in the money sometimes good if it revolves around earnings and they're thought to be positive for a call or two, not crazy YOLO gambling like Wall Street Bets guy do. It's not a bad strategy, but again, you should be far out, like 5 weeks, 8 weeks maybe, just to give yourself this protection. Sometimes stocks will react badly for a week and then cooler heads prevail and the bargain hunters come in, and next thing you know, the stock pops dollars on you, and you just don't want to be without the call. That you want to do. Hi, this guy asks, SoFi is public and rolling, and Robinhood, we're in it for the little guy. What a joke. In 10 years, who's still around and who's the BMOC? Again, the Robinhood is not a bank. Robin is just a platform trading service, a one-trick pony. They've got limited upside, really. I just wouldn't touch the stock. With ATIP being such a laggard as of late, will their financial report even do anything to raise the price? If nobody knows about them, what will that report move upwards? Well, it depends, because if the report comes out and they're now talking about the fact they're public and how many centers they have, how many centers they're building, what their numbers are, what their expected numbers are, it could be that a bunch of stock analysts start to follow the stock awareness, and all of a sudden you will begin to see stock analysts recommending the stock, talking about this company's potential. $8, $9, $10 a share is right around the corner. And who knows? Get ready, kids. This weekend, oh my God, it's happening noon Eastern time for each class, Saturday and Sunday, live right here. And Bruce will be on the whiteboard just going. This can be great.